All right, everybody, here we go. We have the insurance video. This will be probably one of the most comprehensive. I learned something getting all this. I interviewed my insurance rep today, took a ton of notes, and I have put together everything you're going to need to know about commercial truck insurance when you first start, and some stuff that you may not know now, even being in it. This will help anyone. Okay, so let's jump right into the number one important thing. Make sure you're dealing with an agent that knows and specializes in the trucking industry. Make sure that was my insurance rep's number one point. Make sure you watch this all the way through. I'm going to break down the main categories of what coverage is, what factors in the rate getting insurance, what factors in the rate having insurance. I'm going to fill in a few other things, some add-ons, a couple of things about which states are the worst to insure with. And at the end, I'm going to give you my rep's name, number, email address. She's made that. She said that I asked if that was good to go. She said that's totally fine. I said you might get a lot of tire kickers. She said that's what they do. So now you'll actually have bullet points to take to her to not only know what to ask her about, but to or any insurance rep, but to know what if they're telling you everything, to make sure you know what you have in front of you that they need to be telling you about, or what you need to be asking them. So let's cover the main categories first. What is in a commercial trucking policy? Number one is physical damage. Really look at your quotes when you get a quote for physical damage. If you have a truck or a trailer that is financed, you have to have physical damage coverage. You must have it. This is what replaces or repairs your truck or trailer if it's involved in an accident. The second is general liability. Now, this isn't required in a policy. This covers anything that might happen that isn't auto related. So if you load or unload your own freight pretty regularly on another facility's property, you're going to want general liability, because this covers damages or bodily injury to a third party by you. If, like, say you're loading or if you're using the forklift and you run into a cantilever rack or something and knock a bunch of stuff down, you're doing property damage. If something lands on somebody, there's bodily injury and all that. This is what covers you on that. The approximate, and I asked if this was legit to say, and she said absolutely. The approximate price for this is about $400 per year added onto your policy for $1 million worth of coverage. So that's definitely something to think about. Number three is auto liability. This is required. This isn't just required for the truck industry. This is required by the FMC. This is what makes your authority active, is your auto liability. The FMCSA minimum on general freight is $750,000. The FMCSA minimum on auto haulers, car haulers, is $1 million. Now, those minimums are important because one thing I want to pepper in here, if you want to age your MC, you know how the first 90 days is pretty rough, even really the first 6 months is kind of rough. If you want to age your MC, what you can do, if you have a car, just a car laying around that's paid for, it's worth almost nothing, or a truck, whatever, you can open a bare minimum policy and put your car on that policy. Now, your car is a commercial vehicle. You don't have to drive it. You don't have to haul freight with it. You just have to have auto liability on a vehicle, and your MC's active. So you can be leased on somewhere, you can be hanging out, you could be working your regular job. The price on that, I quoted my car. I have a car that's worth about $8,000. I priced it with the $750,000, and that quote was under $4,000 a year. So you're talking probably $300 a month. Something to think about. The next step we get to is cargo insurance. Now, this is pretty cut and dry. This covers the cargo that's on your trailer when you're hauling it. And the thing about cargo insurance is you only need enough to cover the cargo. Now, the general rule of thumb or the norm is $100,000 of coverage. That's typically just required by brokers because you're not doing any dedicated freight. This could be anything from a couple of steel pieces of rebar or something, up to a bobcat or, skid steer, something that's actually worth $100,000. But if you're dealing with direct stuff, if you have let's say you do the same thing every day, or you haul the same thing all the time, you only need your cargo insurance to cover what that is. So there's something to think about. And if you're talking to a broker and they say you need a lot more cargo insurance, keep in mind that the max on most companies are $250K. So if somebody's requiring you to have like $500,000 worth of insurance, then you're going to have to start grouping other insurance groups into your policy. So that's something to watch out for. And as far as your deductible, the standard is about $1,000 deductible. Now, if you wanted to make that higher, like $2,500, think about that. Sometimes it really will impact your rate, but generally it's only about $100 difference a year. The last one is aggregate. Aggregate goes hand in hand with general liability, which is the one that's not required. General liability, let's say you have $1 million policy with general liability, that is per occurrence. So if you have an accident or something like that that is costing, $1 million or whatever, that's just one accident. If you have another one, and so on and so on and so on. The aggregate is basically what caps the capacity of what will pay out that year. So let's say, you have $1 million policy or a $2 million general liability policy, and your aggregate is $1, it's only going to pay out or $1 million annually. The aggregate is dictated by the insurance company, not you. Okay, now now that we covered basically the main categories of a policy, let's talk about rates. Let's talk about what plays a factor in your rate in getting insurance. Number one is credit. Just like everything else, credit, good credit, good, bad credit, bad. The rates reflect that either way. Number two is your MVR, your driving history, and a couple of disqualifiers, or not necessarily it's going to be disqualifiers for a lot of companies, potential insurers, but a DUI, DWI, and a suspended license. Any of those in your recent history, you're either not going to get coverage based on what agent you're going through, or if you can get coverage, it's going to be really high, and it's going to be with less than desirable companies to most shippers and brokers. Number three is your age. If you're over 35, that's ideal for insurance. That's kind of like your free range. Under 35, you're going to pay a little bit higher by default just because you're not 35. If you're under 25, your rate is going to be much higher. Just right off the go. You could have a perfect record, perfect credit, all that. You're still going to pay more because you're under 25. Number four is your CDO and CDO age. If you're going the CDL route, and this is CDL hotshot or the semi world. Ideally, insurance companies want you to have a CDL for 2 or more years. That's not a requirement, but that's where a lot of companies won't insure you without that, and that's where Progressive is one that will, and that's why a lot of people say that Progressive is one of the only companies that will insure you. This is more or less stemming from the semi world of everything, because that's what all these guys jumped into. So if you hear that, that's where that basically came from. And another thing about Progressive is you can get insured as a new entrant by multiple companies, but the reason most people end up going with Progressive is because they have the fastest turnaround for quotes. So generally, you'll get a quote back sooner from them, and your agent will let you know, hey, that's a really good rate, you should jump on that, or you might just say, I can't wait anymore, I'll take it. So this is why Progressive gets thrown around so much. It's not necessarily because they're the only people that will insure you just new coming into this, but they usually are the quickest to respond, and in some instances, they're the only ones that will cover you. You got to make sure you're dealing with an agent that deals with multiple, you want to shop around, but let them do that for you. But make sure that they have multiple agencies to shop with. And number 5 is where you live. The state is the biggest factor, but what is another biggest factor isn't necessarily the city, it's the county that you live in and the auto claims that are involved with that county. This is where you can break away from certain things. Let's say you live really close to a major city, or you're in a county that a major city's in. This is where you want to really look into where you garage your truck and trailer. Because if you don't garage it at your house, say you live in an apartment complex, you're probably not parking there. Let your insurance rep know where you're parking it, because your garaging zip code may be a much cheaper policy than if you just by default use your home address or your business address. Keep that in mind, because that could actually save quite a bit of money. The only thing to make sure of is that your garaging address is secure. It's either fenced or monitored, surveillance cameras, or if it's in line of sight of you or your business. All right, what factors your rates while you have insurance? Number one, of course, is at-fault accidents. You get enough piled up, you're going to get revoked. That'll cause revocation almost immediately. And keep in mind too, this is the major probationary period is your first 2 years being insured, and I'll come down to that here in a minute. Number two is you're out of service. You rack up some violations in a way station, you get placed out of service. You want to avoid this at all costs. You want to baby this MC number, at least for the first 2 years. I mean, you want to baby it the whole time, but definitely during the first 2 years. Out of service violations are most definitely going to raise your premium, but they could also lead to your insurance being revoked. Number three is just violations at a way station. Just picking and choosing. Now, violations are weighed by severity, and you'll actually see that when you get, you can check that on your SMS. You can get you'll see that. You'll see the severity of that. I believe it's actually on the inspection form when you do get a violation. Those could play a potential role in raising your premium come renewal, because insurance renews every year. It's annually. Number four is growth. Yes, growth. Insurance companies do not want to see substantial growth in the first 2 years. This is supposed to be really your learning curve. Like I said, it was kind of your probation period. This is where you learn everything. This is where you're supposed to be learning the business. How to manage a vehicle, how to manage the business side of everything, and compliance and all the paperwork and stuff. Because the more trucks you add to the fleet, the more drivers you add to the fleet, the easier it is to get away from you. And that's where the liability rolls in, to where insurance companies will cut you off. They will actually prevent you. They won't add drivers or trucks to your policy anymore. And if you do cap out, they might even cut you off anyway. But if you do keep trying to grow, they will cap your capacity. They'll tell you that you can't hire drivers unless they're in your zip code. They start getting super strict so that you don't hire more drivers, you don't add more trucks. Okay, and now options to your policy is one big one is uninsured motorists. You might want to make sure that you have that on there, because this, once again, is one of the only things in your insurance policy that actually protects you. So if you do get hit by an uninsured motorist and you don't have uninsured motorist coverage, you're not getting covered. Then that's not just vehicle or trailer, that's bodily injury to you. And the uninsured motorist coverage can go as high as your auto liability. So if you've got $1 million in auto liability, you can get $1 million of uninsured motorist coverage. And for the power only guys, like your RV haulers and people that just pull other people's trailers, you're going to have an option that's called a trailer interchange. You'll have to have that added to your policy. All right, so I asked my agent, what are the top 5 states that are the most expensive or the most difficult to get insurance in? So here we go. Number 1, obviously California. Number 2, Florida. Number 3, New York. Number 4, Michigan. And number 5, surprisingly, was Mississippi/Louisiana. She said those states are very hard to write policies. It's almost impossible to write a policy out of state. If you live in these states, you're going to want to deal with a local agent. All right, guys, and now for my agent, and feel free to call her for your questions, your future policy, maybe even your current policy. Her name's Deb. She works at 3G Truckin Insurance out of Alpharetta, Georgia. Her number is 678-822-0700. 0149. Her email address is deb@3ginsurance.com. Feel free to give her a call. She said it was perfectly fine that I send you guys to her. So I hope you found this video helpful. I hope she can help you. Whether, like I said, whether you're getting into this or not, this is very important stuff to need to know. This can make the difference between you getting into hotshot and you staying in hotshot. This is super important. This is more important than what truck should I get? What kind of trailer should I get? This is more important than that. You have no idea. I've watched 2 businesses sink because of insurance. We'll see you guys next time.